All right, welcome. Sorry, no cool music intro today, but we do have Mark Lamb of CoinFLEX on the show today. How's it going, Mark? How's your day?
It's going great. How are you? Yeah, just starting. How's it going?
Yeah, we're on now. We're on YouTube Live now. Good, having a good day. I got this beer. It's a Spotted Cow. Oh, it's green, so it doesn't show.
Nice. Starting. How's it going?
Oh, I'm got it.
Awesome.
Going, and it's only from Wisconsin, so that's why it's cool. Because I was just in Wisconsin, and so I drove it back to Atlanta. They literally only sell it in Wisconsin for some reason, but it's such a delicious
Oh,
beer.
wow.
So I had
That's
to
awesome.
smuggle a couple cases back, but
Nice.
worth it.
Respectable.
Yes. So, off the bat, when did you first get into Bitcoin?
2012. Yeah, I got into Bitcoin in 2012. I was looking at a bunch of different alternative forms of money. And basically, most of them were basically fiat-backed banknotes issued by some local area or digital projects that were kind of interesting but totally centralized. And found Bitcoin and got kind of basically when it went to a conference in 2012 in London, and I just was like, wow, this is totally different from anything else that exists in the world. And so I went all in. Personally, and then started trading it and making markets OTC to kind of local buyers and sellers. And then I realized, there was no exchange in the UK, and so I decided to make CoinFloor, which was the first UK Bitcoin exchange. So
The first UK Bitcoin exchange ever?
yeah.
What year was that?
2013.
Gotcha. Sweet. How did that go? What was the throwing some?
It went great.
Around,
It's still around. Still one of the main exchanges in the UK. Yeah, I'm no longer involved with it personally, but I mean, still a shareholder. But yeah, no, it's still kicking.
Nice. And have you ever bought any physical goods or digital goods with Bitcoin before?
I have bought loads of physical and digital goods with Bitcoin. I've gone weekends and weeks where I've bought nothing other than goods with Bitcoin. No, yeah. I mean, I can't even name all the things, but food, beers. I have a scarf that I paid 2 Bitcoin for back when it was $8 or $9, and that was very painful. I still have the scarf, but I wish I'd had the Bitcoins. But yeah, no, I've
nice
bought
scarf?
all sorts of things. Yeah, it's not even a nice scarf.
Wow.
No, I've bought loads of stuff with Bitcoin, and I'm not sure about digital goods. I bought things online, but I don't know. I bought lots of digital goods with Bitcoin, other than other cryptocurrencies, obviously, which is basically the best digital good you can buy with Bitcoin.
Yeah. So, like, what services would you use for like your payment processors? Is it mostly like BitPay or directly?
Oh yeah, just whatever they take. There's a pub in London that takes it directly. I used to live in London, so there's a pub in London that used to take it directly without a payment processor, and they would just keep the coins. BitPay, Coinbase, all the different payment processors as well. So yeah.
Nice. Okay, so fast forward, Bitcoin Cash fork happens. What's kind of like your thoughts been on the whole very high overview of the scaling war and when Bitcoin Cash came to be?
Yeah, so I mean, I was a Bitcoin maximalist for many years, and kind of missed out on some of the altcoin rally from 2017. I'm much more into altcoins now in terms of the amazing markets they can create and dynamics they can create as well in terms of game theory. But when the Bitcoin Cash fork happened, I was very focused on the big block and small block debate, and basically my view shifted maybe 4 or 5 months before the fork from the small block side to the big block side. Basically, both have an interesting value proposition. One is trying to be a store of value, but from a pure payments perspective, there's a lot of appeal to the big block proposition, and the trade-offs are kind of, I started realizing from what Peter Risen was saying, that the trade-offs are really not as bad as people think. So Peter Risen had a piece and around the scaling and the fee market, and that really kind of changed my mind in terms of a lot of things on the big block small block debate. So I went out and purchased a bunch of BCH. I got BCH from the fork, or I got both coins from the fork, and it's always been something I've cared very deeply about, BCH. So I was looking at kind of the fork futures markets and talking to different people about fork futures markets back in 2013. So I was also actively trading the via BTC fork futures markets when that fork happened. So yeah, the BCH was kind of my first experience with fork futures. It was also kind of very important in terms of the big block versus small block debate. And I think what it did really was it gave the BTC community an ability to be their own coin and not have to deal with people that wanted something totally different out of it. And it gave the BCH or the big block community, the big block side of things, the ability to basically express their own view and have their own reality that they can control their own destiny on. And so, the outcome was valuable for both sides. The very immediately the prices of the two parts were greater than one Bitcoin prior to the fork. So that was a really interesting case as well, because people started realizing that, hey, actually, if you fork a coin, it's not always value destructive or even net zero sum. It can be positive sum. It can be a positive sum game. So even all the people that this is really the beauty of markets, but even all the people that don't like big blocks, they got the ability to sell that future, sell that outcome. And I think that was one of the good things about that fork. Obviously, many people don't like that there was a split in the community and people argue over tickers and all sorts of things, but you can't argue with the fact that it was value accretive to a pre-fork BTC holder.
Yeah. Before I ask you this question I had, we need a high five. Other way. It's always tricky. It's always tricky. Bring it in. Psh, nice.
Awesome.
All right.
Love it.
So can you kind of walk me through like how that if you remember off the top of your head how the prices were during the BTC BCH fork? Like, was it pretty accurate to what actually the fork opened with price wise?
Yeah, I mean, so the interesting thing is but it also was very volatile as well. So, and I think there's some fundamental differences in the contracts that caused some of the volatility. So we factored in these things when building our contract. So I mean, the biggest thing was it sort of went between 0.05 of a BTC all the way up to 0.1, and I think even 0.13 of a BTC in terms of the fork futures market. And so what that and the opening price of BCH was sort of in that range as well. It was somewhere kind of sub the 0.05 mark, and so it was a decent representation. One of the things that inhibited the representation was there was no leverage, and there was kind of the opposite of leverage. In order to sell a pre-fork or a post-fork, I think it was actually called BCC, but in order to effectively sell a post-fork future BCH, you had to post a whole BTC, and you would get the right to sell both, but you still had to fund a whole BTC. So it's kind of the equivalent of a way over collateralized margin requirement, and that's why the price is ultimately skewed towards being higher than where the price ended up being, because there were people who wanted to buy, and if you wanted to sell it, it's like, well, a seller's got to post a lot of margin, so it's very expensive to sell. So that's where the pricing dynamic kind of skewed towards higher than where the reality ended up being. But the cool thing about our futures contract is you post margin in US dollars, and you can post margin in other assets, but we're just going to mark that against the US dollar value of that asset. So you can post margin in BCH, you can post margin in BTC, you can even margin these futures in Flexcoin, our native token. And we have people trading the BCH futures using Flexcoin to do so. And so if you post that margin, let's say you post $200 of margin, you can sell $1,000 of BCH futures. So the great thing about what that means is there's actually you don't require a bunch of extra margin to sell one ABC or one post fork BCH. You literally have to post less margin, so there's leverage involved. So there's 5x leverage on the contract, and what that means is it's way cheaper from a cost perspective for sellers to sell the contract, and for buyers as well. But the cool thing is it's reciprocal, so it works both ways. It's equivalent leverage for longs and shorts, and so that gives an easier ability to be fair on the actual pricing of the asset and the contract. And so that's kind of one thing we incorporated into our version is just leverage and dollar margining rather than no leverage and kind of BCH margining.
Sure. We'll get into that future in a sec. It's kind of a lot to wrap your head around. But before we do that, we're going to keep going on the timeline. When did CoinFLEX first come up?
CoinFLEX has been around since 2019. So sorry, I just got some echo. So CoinFLEX has been around since 2019. We started as a spinoff from my last exchange, CoinFloor. So CoinFLORX started a few years ago. We spun that out into CoinFLEX in January of last year, and have basically been going ever since. So we launched, partnered with Trading Technologies, one of the biggest futures trading platforms in the space, have been listing some coins, we redesigned the way our futures work. So now, instead of just being a physically delivered futures contract, it's also we also have perpetuals that are deliverable at any time. So we're really trying to bridge the gap between spot and derivatives in the space. And that's with these kind of physical contracts that you can convert into spot and convert between spot and futures. And it allows for a lot of lending opportunities. Like you can lend dollars on CoinFLEX at about 15 to 25% annualized. And that's just basically you're taking the difference between spot and perpetuals. And those differences can get pretty wild at times. And so the result of those differences is basically interest for a dollar holder. So it's an exchange devoted to high leverage trading on one side, and then borrowing and lending on the other side. That's kind of the flip side of the derivatives market. And there's a lot of exchanges and derivatives that are purely focused on highly leveraged trading.
250 times? That's pretty high.
250 times. Yeah. 250 times. Yeah. High leverage. In fact, the highest leverage.
Yeah, I was gonna say I used 100 times on BitMEX once, and that I'll just say that position didn't last very long.
Yeah, I mean, in all honesty, the 250 times is actually on the spread market, which is buying the perpetual and selling the quarterly, and it's actually a very safe position. It's probably it's safer than being 100 times leveraged on the perp or the quarterly. Because you're hedged. You have no exposure to the price of Bitcoin or BCH or ETH. You're literally just trading the spread between the two. So,
Interesting. And so, if you can, I understand it mostly, but can you give like a brief, like minute, 2 minute difference between perpetual, quarterly is a future, right? So you have you have a perpetual, you have a future, and then you have the spread market, right? Those are the three.
Yeah. So the perpetual is the most popular derivative in crypto, and it's basically a futures contract that never expires. So there's two things people don't like about futures. One, they expire every quarter, which means if you have a position, you go from having a position to not having a position, and that can be confusing for folks. The other thing is they trade at a fairly substantive difference to the spot price. So they might trade $100 over or $500 over even, or some big percentage over or under the spot price. And people may feel like, well, why am I getting ripped off? And the difference is really an interest rate, but people don't want to think about that difference. They just want to think about the spot price. And so the perpetual has the advantage that because it never settles and because it has these funding payments that are actually external to the pricing of the instrument, the price looks exactly like spot. So as a result of that, it's a lot easier to trade. So people find the perpetuals really user friendly, especially if they're only experienced with margin trading or spot trading, and so they're kind of very, very friendly for new people to derivatives. They are very similar to spot. You just can buy more of it than you have in your account. So yeah, the difference we've made on our perpetual is deliverable. So if you buy 50 Bitcoin of perpetuals and then you deposit $500,000, you can get 50 Bitcoin. And you can do that on any amount. So you can do that on 0.1 Bitcoin as well.
So explain that to me a little bit. I guess I don't fully understand. I think Mike was on my show, like number 20 or something. He was on super early and he was trying to explain physical delivery to me. And I don't know if I still have wrapped my head around that.
Yeah, so basically futures contracts work in two ways. One is cash settlement. And with a cash settled future, what they do is they say, oh, you bought the futures contract at $5,000 per Bitcoin. And Bitcoin went up to $6,000 per Bitcoin. And on these spot exchanges, it's called $6,000 per Bitcoin. So we're going to give you $1,000 at the expiry of the contract. Congratulations, you get $1,000. The other way to do it is physical, and it's, hey, you bought the Bitcoin at 5,000. It's expiry now. Do you want to pay $5,000 and get 1 Bitcoin?
Oh, okay, that makes
sense. And that's a very different value proposition, because if you get that Bitcoin, you can then sell it anywhere. You can do whatever you want with it. You can use it for commercial purposes. You might owe someone a Bitcoin, not $1,000 of P&L. Mm-hmm. And if you have that $1,000, you might have to go out and buy Bitcoin with it to deliver to that person.
Right.
So there's all sorts of reasons why you might want delivery. One of the most basic and obvious ones is the thing that keeps markets in line is arbitrage, right? And so arbitrage and market making are basically the concepts that keep markets in line. And so why should a derivative be worth anything? Why shouldn't, BitMEX perps or CoinFLEX perps be worth half the price of Bitcoin? Well, it's because you can buy a CoinFLEX perp and click deliver and get a Bitcoin. So if they were worth half the price of Bitcoin, someone could just deposit dollars and then double them the next day. And that's different to BitMEX. BitMEX contracts have traded at 10, 20% discounts, during March 13th, for example, simply because you can't get a Bitcoin from them. There's no tie to spot other than these funding payments. And the funding payments do keep it in line most of the time pretty well. But there's no mechanism to immediately keep them in line, because those funding payments, if in a market where there's high volatility, that'll take days. That could take weeks to put it in line. And that's what we saw happen with the BitMEX perps. They took weeks to be put back in line. So it's really an alternative market where this deliverable perp has a way out. You can hold exposure in it. You can buy it. You can sell it. You can also sell that exposure and convert to dollars in your account, or take that exposure, buy it, and then convert it to dollars in your account by clicking delivery. And we initially did that for quarterly futures, but one of the things we realized is Bitcoin and crypto is such a spot-driven market. Spot is so active that actually, if we do it for perps, immediate futures, same-day futures, if we create this equivalent of a one-day futures contract that's also a perpetual, then actually it can be an alternative to the spot market that can take over spot. And so part of what we want to do here is not just go after the BitMEXs of the world, but go after the spot markets of the world and be an alternative to those as well.
Gotcha. Interesting. So, what type of volume you guys do? I have the perpetual here, the BTC one in USD. It looks like, I mean, just looking at your volume chart down here, you get a lot of like high volume spurts. I don't know if all exchanges are like this, but yeah, what kind of volume do you do? Like, what kind of traders are on your site?
Yeah, so I mean, we usually do between $50 and $100 million a day. We're we're not the biggest derivatives exchange yet. We've had many days where we've done over half $500 million a day. So, but part of what we're focused on is basically tying derivatives into spot. And what you can do with that is you don't have any limits on what you can list. So other exchanges are pretty limited in what they can list based on what has a mature spot market. We really want to go after the coins that don't even have spot markets attached. And we want to do the derivatives that are kind of unique to our market. So the Bch Abc contracts are unique to our market. There's no other derivatives exchange in the world that has them. But I think there's a lot of also new coins in the DeFi space that people really want to trade, but they can't get it on any centralized exchange. We really want to list those. We really want to
WhenLink.
Yeah, no, I mean very soon. But other than these types of coins, we're very focused on like connecting all the markets together. So a lot of our traders will trade quarterlies and then borrow Bitcoin and buy it elsewhere, or they'll they're just looking to trade with one margin. So they have dollars on one venue and on one account, and then they can trade multiple instruments. So that's a problem with some of the other exchanges as well, as they're Bitcoin margined, or they're margined in weird ways that makes it very difficult to trade lots of different instruments. We've got portfolio margining, so that kind of also helps for a lot of our customers. Is like you can hold 5 different positions with the same margin, and if they're somewhat offset, then you probably don't have to top up that much. So
gotcha. So the Bch Abc Futures. So we're here.
Yes.
We're on this page. Obviously, it's the first fork futures for the upcoming November fork. And as I explained in my last show, it's going to be a messy fork, it seems like, if certain things happen. And so to recap, basically, if ABC gets majority hash rate, if the IFP gets majority hash rate, there will only be one chain. If the non-IFP hash rate, if the non-IFP chain gets majority hash rate, ABC will be on its own chain separately, and there will end up being 2 chains. And so, so you have the Bch Abc Futures here. So this would be the IFP chain, right?
Yeah, the Bch Abc is the IFP chain, correct?
Okay, so I mean, right now there's been okay volume. I think it's been let's see, we could probably find I
think our highest day was about $50,000. The volumes are not really they're not going to be that high on a contract like this. They're never going to be super high, because it's there's a chance it goes to 0, there's a chance it goes to 300. It's kind of a scary contract to trade.
Right.
But people that understand it, it's a very valuable contract to trade, because you can express this view, and not just express it in a rant on Twitter or rant on Telegram type of way, but you can actually profit from being right. So it's a bit of a niche contract. It's not something that thousands or tens of thousands of people are going to trade, but for the hundreds of people that might trade it, it's quite interesting, and it has a lot of value and utility for those guys. So yeah.
So if you think Bitcoin ABC is going to retain the majority of hash rate and the majority of ecosystem, you could get 1 BCH for $30 right now. So that's basically it. And so I guess I probably have some more questions about that, but I don't have them now. So does this other BCH contract on the quarterly, is that the non-IFP chain?
That is the non-IFP chain, yes.
Okay, so you have 2 of them. And so there's a potential there's a non-IFP chain, like there's no non-IFP chain, right? And so potentially this could be worth zero, right?
Yeah, no, both contracts can go to zero.
Right. So be careful.
Well, sorry. Either one of the contracts can go to zero. It's very unlikely that both of them will go to zero, but one contract or the other contract could go to zero.
Yes, right.
Yeah.
And so, yeah, combined, I think the spot price of BCH right now is, I think you probably have it on here. Is the spot price the non-IF? No, that would be, I mean, that's both right now, I guess.
The perpetual price is it effectively represents the price of both.
Right.
So yeah, I think there is an opportunity, and someone posted about it, and then it kind of slowly started going away. But it's still there. You can buy a BCH and sell both futures contracts, and by doing that, you can effectively lock in a double-digit percentage dollar interest rate on dollars.
Mm-hmm.
Not very interesting for BCH holders because I think they hold more BCH than dirty fiat, but it is a trade nonetheless. But yeah, no, I mean the contracts are definitely risky. People should be careful trading them, but they're designed to give people a specific exposure. So if you think that ABC is going to be the dominant version of BCH, buying the BCH future is a great way to bet on that outcome. And not only can you bet on it, not only can you express your voice on Twitter and Telegram and these venues, but you can actually make money from being right. So it's kind of, I think there's a lot of people in the BCH community that are sort of fed up with the way that governance is done right now, which there's no formal process for this. In many of these coins, there's no formal process for this, but it's effectively like people yelling at each other on social media.
Right.
And there's also a problem there because people are yelling at each other in English and people are yelling at each other in Chinese. And there are some bridges, there are some multilingual people in the community, but it's never going to be perfect. And the translations are never going to be perfect. The nuances are never going to be perfect. You're going to miss out on things. So, and there's always going to be bias as well. So because of that, it's one of those things where, there's a universal language we all have, which is money. Everyone speaks the same language when it comes to that. And we all like profit and we all fear losses. And so it's really easy to just say, hey, this is the price of the asset. And someone can short it, someone can buy it. And they can, if they disagree with the price, don't just talk on Twitter. Don't just talk on Telegram. Buy it, sell it, whatever. If you think the BCH future is going to zero, short it. If you think the ABC future is going to 300, buy it. And if you think the ABC future is going to zero, short it. Or if you think the prices are not going to zero, they're both going to exist, but they're just wrong. You can trade it as well. So it's an opportunity to sort of vote with your money and profit from doing so. And it's an alternative to the mechanisms we have right now. And I think, I'm not one that says we should have one mechanism for governance. I think the beautiful thing about blockchains is they can have decentralized governance, and truly decentralized governance means there's not just one way to do it. So you can have things like coin signaling, where you vote with your coins with signed addresses on the blockchain. You can have things like miner signaling. You can have things like Telegram and Twitter votes, and you can have things like exchanges that say we're going to support this coin or we're going to support that coin. And so far that hasn't really happened yet. Miner signaling hasn't really happened yet. But all of these things are mechanisms that can be used to govern a potential fork or a potential upgrade, whatever you want to call it, but govern the outcome of a coin. And the beautiful thing is, if you don't just focus on one of them can be manipulated, one of them can be attacked, one of them can have problems. There's no perfect mechanism. Miner signaling could be a problem. There could be problems there. People can signal for one thing and do another thing. But hey, maybe there's problems with these futures contracts. We designed them with some level of experience in previous forks and previous debates like this. But nothing's perfect. People might have complaints. But the nice thing is when you have all of these things in total, it creates a very decentralized system for governance. And I think these futures specifically, as one of the mechanisms for that, create a really capitalist form of voting. That is, it also transcends language problems and cultural problems. So yeah, that's basically the goal here.
Gotcha. So, so exchanges like can decide which tickers to use, right? And people have said, oh, I mean, this is probably over exaggeration, but like, oh, BTC Core kept the BTC ticker because exchanges colluded, yada yada yada, right? And so I saw some people were complaining about the Bch ABC ticker, right? And maybe should it, what do you think about doing like a no IFP ticker? Like IFP ticker. Is that just more confusion? Like how did you come up with just like BCH, ABC, and just regular BCH?
Yeah, I mean, I think in terms of no IFP versus the the acronym ABC, I think more people were actually familiar with ABC than the IFP. So ABC represents a number of things and includes a code base. It includes a specific set of people. More people were familiar with the code base and the set of people than the IFP, even though the future is really describing an IFP or no IFP outcome. So, but we decided to call it ABC futures because basically the ABC side is making the very, very significant divergence from the protocol. And maybe it's significant, maybe it's not. That's what the market has to decide here. But it is making the difference of how the mining rewards are spent and how they're distributed. And so whereas both sides are upgrading to ACERT and there's not that much significance that's happening on the non ABC side. So that we saw two outcomes, the non-ABC side and the ABC side. The non-ABC side wasn't really making any substantive changes in this November 15th upgrade cycle, and the ABC side was, and so we just gave it that futures name. If ABC wins, I think every exchange is going to call that coin BCH, including CoinFLEX. But and how do you define win? Well, I think price is a pretty good definer of that. Hash rate. There's all sorts of mechanisms you can use, but the ultimate ticker battle is still unclear. But for now, on the futures, it just made sense to do it this way because of the significant divergences that ABC was making to the protocol.
Gotcha. And so I guess the BCH futures you could call BCHN, but I guess it's really kind of all the other nodes. So you just kind of kept it BCH. Yeah. So
yeah, it wouldn't really be fair to the other nodes to call it BCHN. We thought about it, but we just thought it doesn't make sense because then there's Verde and all these other things that are not getting really accurately represented. So yeah.
Gotcha. What is the highest valued SLP token by market cap?
That's Flexcoin. Yeah. So we have our own SLP token, Flex, and Flex is really interesting because its base use is similar to other exchange tokens. It's the fee. It's the thing you use to pay fees on CoinFLEX. You can pay fees in dollars if you want, but obviously you're going to be paying double or triple the fee rate depending on what contract you're trading. And so Flex is basically the currency used to pay fees on CoinFLEX. It's also got a few different staking mechanisms. So we have an options platform. You can stake it into the options platform and basically collect house edge. We're also going to be opening up, and people are quite excited about this. I'm quite excited about it, is the insurance pool will have a staking function to it as well. So many exchanges have an insurance fund. The exchanges typically own 100% of that insurance fund. And it typically ends up being very lucrative for the exchange to own that insurance fund. We're basically opening this type of vehicle up to anyone who owns Flex. So anyone who owns Flex can stake that into that pool of capital and participate in the the profits from liquidations. And there's a role to be played as well. It's it's basically ensuring the platform, but that's something exciting about it as well. There's a lot of different ways where we've used Flex in the past, and we're going to be using Flex in the future. So it's kind of the core ecosystem coin of CoinFLEX, and yeah, it has a few different uses and more coming out, and more and more over time.
Yeah, so it's kind of, I mean, you guys are using obviously the SLP, and it's one of the few SLPs that actually like have a use case. I know there's like, I mean, Spice's use case is kind of just like tipping with emojis, I guess you could call it, but like Flex actual has
Yeah.
a use case. But SLP itself it's called Simple Ledger Protocol, so it's very simple, right? And so do you kind of like that simplicity? It's not like super programmable like some DeFi shit coin would be. Do you kind of like is that fine for you guys? Do you kind of do that
Yeah.
flexibility on that side?
Yeah, we like the SLP protocol. It's it makes it super easy to create the tokens. Makes them very easy to move them around. There's huge benefits to using that protocol. I think when it comes to when it comes to these tokens, what ultimately matters is just it's very easy to build on. SLP has that, ERC20 has that. Not that many other blockchain protocols have that, and so it is one of those rare things that BCH, Ethereum as well. But I think it is, you can create an Ethereum contract with a few lines of code. You can create an SLP token without any code. So and there's probably tools to do that as well on ETH. But it has some real, I mean, it's true to the name. Simple. It's very simple to create. So, and I think that's where you see lots of people creating SLP tokens for all sorts of random things.
Mm-hmm.
And yeah, I mean, it would like, I'm a fan of the DeFi stuff. I think there's some really cool economic experiments going on in that land. I wish that BCH had that stuff as well. I think it would be really cool. But I think BCH is kind of focused on being a UTXO based blockchain, and there's some limits there in terms of smart contract functionality. There's kind of some questions around, do those limits, do they have trade-offs in terms of more scalability, more transaction capacity? I think most people would argue they do, and if blockchains are mostly used for actual economic transactions, then it's great. But there's a lot of great things happening in Ethereum. I mean, any community, not just BCH, but should not ignore all the amazing things that are going on there. And even if many of them turn out to be failures, YAM went down 99% yesterday.
Yeah,
right? But at the same time, it
went up.
It's also
100%.
well, it's also just amazing. I think the people that staked in it didn't actually lose any money. They just lost out on opportunity cost. And there's some really fascinating experiments happening in Ethereum land. I think that's kind of where a lot of the great innovation in crypto is. And there's great things happening in BCH. I mean, Cash Shuffle, a lot of the privacy stuff. I think BCH is making some real strides towards privacy. There's no reason that all the privacy innovation has to be left to actually designed privacy coins when you've got a coin that has very, very low transaction fees. The best form of privacy is ultimately hiding in a crowd and lots and lots of transactions happening, many of which are kind of real economic transactions, but even just transactions that move money around. That can create very, very good privacy without having trade-offs around auditability. Some of the privacy coins have auditability trade-offs, so or scalability trade-offs, and so that's, I think, something that BCH has, and ultimately I think the thing that we're trying to do in terms of not just the BCH space but the crypto space is help provide with these futures contracts a way to add features. Lots of coins get big, well, not that many coins, but some coins get big enough where they ossify. their code base ossifies, and they stop adding features, they stop changing, they stop improving. And maybe there's this argument that you can freeze the protocol and it's, it's good forever, and that kind of has some merit in terms of some internet protocols are kind of pretty ossified and pretty sticky and stable over time, over long periods of time, even decades. But I'm not sure that's actually applicable with blockchains, because of what they're trying to do is to some degree more complex than an internet protocol. And so I think a need for upgrading and changing is there. And if you ossify, it's very dangerous. You can miss out on things that may become the most important thing for a blockchain to have. So I think that's one of the things we're trying to do with these governance futures, is provide a way for disputes to be resolved and upgrades to happen, ideally in a way that doesn't fork the chain, ideally in a way that doesn't split the community. If the prices are divergent enough, maybe miners will decide not to create one of these coins. And we don't have a vested interest in any of these outcomes, but obviously any community typically wants to stick together. There are some situations, as I mentioned, the BTC versus BCH, where the community is better off not being together. And so ultimately it's the market that's going to decide these things. But there's no upgrade mechanism in a truly decentralized system. There's no, if you have a small coin where it's got a benevolent dictator and that person can just say, guys, I run FYP coin and we're all going to do this today, and he's the only person that's actually working on the protocol, everyone's just going to upgrade because, they don't care. But BCH, Ethereum, Bitcoin, a bunch of different coins, a bunch of the top coins, a bunch of the coins where there's, even if they're not a top coin, but there might be a lot of different strong views or people care very, very deeply. There's no mechanism to upgrade. There's no one person that can say, we're going to do this, and everyone just does it. So I think that's one of the nice things about the BCH community is they've kind of gone through this a few times, and maybe people don't like that about BCH, but I think it's amazing. And I think that's one of the things we're trying to do with CoinFLEX is basically help coins go through this process. Ethereum has a big one coming up as well, which is the proof of work versus proof of stake. ETH 2.0. Who knows what's going to happen? Is that going to be a heavily debated issue? If you're a miner, you don't want proof of stake. If you're a hodler, you really want proof of stake. You don't want proof of work. So, and again, it's similar to BCH. It's a difference of view on who should get the inflation rewards, who should get the new coins. That stuff matters enormously. So if you're a miner, you'll vote one way, and if you're a hodler, you might vote a different way. And we could see that play out in the futures markets. So and ETH 2.0 is a classic example of something that has been delayed, many times. I've been hearing about proof of stake for 5 years, and it's a difficult thing. So many of the things that they're trying to do are difficult. There's some reasons for why it's going to take a long time, but at the same time, maybe one of those reasons is the community is large and it's difficult to upgrade blockchains. So that's one of the things we're trying to solve with governance futures. And BCH is really a great place to solve that, because people are very markets oriented, very capitalism oriented, and they want to upgrade the blockchain. They want to make these improvements, ACER, all sorts of things. We've implemented, BCH has implemented Schnorr signatures. There's been many things that have been actually implemented and changed by this kind of upgrade process. And yeah, there's been some forks along the way, but it's also it's improved BCH significantly.
Yeah, it'll be interesting because ABC is what they've been called in reference implementation. Everybody kind of follows their lead, and now they're doing something people don't like. And if people don't follow them, it kind of proves that, hey, Bitcoin Cash is actually like decentralized. It's one of these things like development can be centralized for efficiency, but if the rest of the ecosystem doesn't agree and the dreaded word community doesn't agree, then well, it's not going to happen. And that kind of proves the decentralization aspect of it. If you can just force whatever you want through, then it is centralized. So
absolutely, yeah. there's even benefits to centralization for periods of time as long as the person isn't doing X, and so yeah, I think that's exactly what you see in BCH. Is it's not a apathetic group of people that are holding coins because they just haven't bothered to sell them or something, like maybe Dogecoin has elements to that. If Dogecoin made a big change, maybe no one would care because people have actually been sleeping on that coin for a long
Yeah.
time. And BCH is like, it's a coin that the community deeply cares, and that's something that can be represented and go into these changes, and also the pricing of them, and also this the signaling of them, and all sorts of things. So it's a proof to the space that crypto is not actually centralized, and BCH is not actually centralized, and it creates a model that that decentralization can actually exist.
Wait, I thought Roger Ver did all the development.
Yeah, he's actually a Mori.
Oh, Roger's actually more. Yeah, 100 Spice.
Yeah, they're the same guy. Yeah.
Oh, well, that's news to me. A little different accents.
Yeah, he's a good actor.
Yeah, got a nice wig too.
Yeah.
Oh, thank you, Tao Jones. By the way, we're getting a ton of tips. I don't know if you've seen them pop across the screen or not, but people are.
I love it.
Yeah, it's been Spice, so we gotta list Spice soon, I think. Yeah, I have a list of things need to list. Spice, V-Bucks, because Fortnite just got shut down by Apple. Are you planning on doing any stable coins, or do you not need it? Because if you do, there's USDH and USDT, which are both on SLP.
Yeah, we have USDC, and which is kind of our base currency for everything, and we have USDT with Tether. We are going to be allowing SLP Tether as well. Right now, it's just ERC20 Tether, and yeah, I mean we've looked at other stable coins too. I think there's some, we're going to list DAI at some point. It's kind of it's somewhat boring to trade dollars against other dollars. But some people are into it. There's other stable coins like Ampleforth, which are crazy and have these rebase functions that kind of blow people's mind. But yeah, no, we do support stable coins.
So I don't see any of those stable coins like on any pairs, or like how does that work? Like I just see USD.
Yeah, no, we have a USDT to USDC pair. So it's a perp.
Okay, I see
spot.
that one. Yeah. Okay.
Yeah, it's. I mean, if you need to trade, if it's really for like people that have Tether needs to buy Tether or to sell Tether or to buy USDC or sell USDC. So there is a group of people that needs to do that, and they can trade that here. And that market is large. I mean, it's a large market, but it's mostly a commercially driven market of people that need to move money around the world. And so yeah, it's pretty niche.
Yeah, definitely niche. So yeah, what do you have plans to grow Flex? I know you have like these games or competitions or something like that. Like, what is your plan to be the next? It's all these exchanges have just such shitty connotations on it. Sure, we can go with Binance. Sure, yeah.
Yeah, I mean, I think the thing that Binance has done that's been interesting, and back in 2017 that kind of made them grow really fast was list coins that no one else has. So our plan is pretty simple. We've created these deliverable contracts. The advantage of the deliverable contracts is that no one has to. You don't have to use an index. You can actually get delivery of the coin. So it makes them actually truly a spot market and a derivatives market in the same thing. So our plan is to list loads of coins that are typically hot coins that no one else has. Gotcha. So we want to be the preferred kind of go-to venue for trading super hot coins that other people have, and that's kind of the goal. That's what we're working on. We think most of the volume in the space is a lot of this stuff, and the derivatives on it is very important. Second to that goal is really the interest rate markets in crypto. So if you buy the perp and sell it quarterly, you're kind of doing an interest rate play. You're collecting or paying perp funding, and you're paying quarterly funding, or you're collecting premium on the quarterly. And this is a bit niche as well, but there's a very, very kind of newbie version of it, which is coinflex.com/earn. And you go to that URL, you can earn 15% on stablecoins. So it's an alternative to these other types of products where, because we are the derivatives market, there's platforms like, BlockFi and Nexo and some of these platforms, they'll pay maybe 8%, 9%. We'll just pay whatever the market is. And that market could be much, much higher. It's gone as high on CoinFLEX as 30% annualized, purely because there's lots of demand to buy perps. And so you're basically getting the full arb between spot and perps without doing any effort by just sitting on CoinFLEX Earn and depositing dollars. So, that's kind of all of our different plans. It's really like list lots of contracts, build the interest rate markets in crypto, and build really easy ways for people to collect yield off of derivatives traders in crypto.
Gotcha. I got a question for you. What do you think about the $9 difference to buy ETH with USDT versus buying it with USD or BTC?
Well, where?
It was in the chat, super nerd. So apparently there's a $9 difference between buying ETH with Tether versus buying it with USD or BTC. I guess he's just asking your thoughts on that.
Yeah, let's see. So we don't have a USDT market for ETH.
Yeah, I think he's just markets in general, not your specific pairs.
We do have a premium on our Ethereum perp right now. So it is about a $6 premium. So you could deposit, you could short an ETH and then deposit an ETH and buy an ETH elsewhere and complete an arbitrage for about $6. And that actually happens all the time in perpetual markets. The way to arb it in other perps is to collect funding, and then you get that difference over time. But the way to arb it in CoinFLEX is actually much, much simpler. You can just take physical delivery. So you effectively do like a spot arb. But these different, Bitcoin was trading as high as $30 over other spot markets yesterday. And this has no effect on P&L if these price differences, they don't liquidate you, they won't cause any problems there because the mark price is the index. But what they do is they give you a lot of opportunities to trade. So for someone who wants to do like spot arb, $30 price differences every day that kind of flip around one day to another, 1 hour to the next, that's great. That's exactly what you want. So the prices do diverge from other exchanges. It's an opportunity. If you sell a contract for example, on CoinFLEX that's trading at a premium, you immediately get some P&L from having sold that. So you have to buy it back in order to actually make a profit, but you get some mark to market P&L immediately. So that exists. That will exist. Hopefully, it might at some point get arbitraged, but the cool thing is it's a perp. So there's leverage to it, and that's the leverage creates the arb, basically.
The leverage creates the arb. All right, learning a lot about this complicated markets. And so just to confirm, all this shit happens in traditional finance too, right?
No, not really. So there's a lot of things.
I guess forked futures don't, but
well, yeah, forked futures don't, but also perpetual contracts don't really exist. Some people have said that CFDs are like a perpetual contract. A CFD is like a perp, but you can only trade against the broker rather than trading on a central limit order book against anyone. I would say that perpetual futures are new to crypto. I would also say that there's a number of other things that we've done and other exchanges have done that don't exist in traditional finance. So in traditional finance, if you sell a futures contract and the thing rallies like crazy, you're on the hook. And if you get stopped out, that's great. If you put stop loss orders in and those execute, that's great. But if they don't fill, let's say the market just gaps up, you're on the hook. And that is probably the single biggest difference between crypto and traditional derivatives markets. And it's horrible for derivatives. For traditional, markets, because what that means is in order to actually trade, you've got to be loaded financially, ideally a multimillionaire before you begin. And you've got to be on the screen constantly or having like really good risk management built into what you're doing. Anyone new to trading is not a millionaire, doesn't have these systems, isn't looking constantly, et cetera, et cetera, et cetera. So if you want to get started trading, crypto is basically the only option, because as a retail trader or as an individual trader in the space, there's no point to trade most traditional instruments. If you trade CFDs in FX, Forex, you're basically getting your eyes ripped out by these kind of wide spreads and these brokers that are doing a lot of shady practices. If you trade traditional futures, you're getting efficient markets, but as a small player, you're going to get higher fees because the fees are actually per contract. The fees are, in some cases, fixed costs. In crypto, it's percentage fees. So you buy $100 of something and you pay, 3 basis points. It's like, tiny. Whereas if you pay a fixed fee, it's extremely expensive. So I think that's kind of the benefit of the crypto markets, is they're very, they're very democratic and open to everyone, rich or poor, and experienced or noob.
Yeah, for sure. Everybody can get wrecked.
Exactly.
Equal opportunity.
Exactly. Yeah, equal opportunity for getting wrecked. That's really the goal here, or making a lot of money. I mean, that is the goal. But so, getting wrecked might be the outcome.
So yeah, that's the real question. When LAMBO?
When LAMBO? I mean, does Tuesday work for you guys?
Tuesday. I think I'm open then.
Tuesday. Okay,
I think I'm
great.
Open. All right, LAMBO on Tuesday.
LAMBO on Tuesday.
Yeah, it's so funny. It's so funny, the LAMBO meme in crypto, because you have
That's great.
You have Roger, who sold his LAMBO to buy more Bitcoin, and then you have Mark DeMezzo, who like bought his LAMBO with Bitcoin and trading, and then it like exploded or some shit to get replaced.
Yeah.
like what?
I knew a guy who put like 50. He put some absurdly small amount of money, $10,000 or I think it was $10,000 or tens of thousands of dollars, into a huge levered position on BitMEX, held it for months during 2017, levered long, made $2 million and bought a LAMBO and totaled it the next day.
Oh my God. It's poetic.
It's just the spirit of crypto.
Yeah, that is the spirit of crypto. I don't get much better than that.
Yeah, I mean, it's real democratization of finance. When I hear stories like that, it's just incredible.
Probably didn't have insurance on it yet.
Yeah, and hey, he's the LAMBO costs $250,000, so he's still up 1.8 million or so, 1.7 million.
Yeah, 1.6 after repairs. Yeah, good.
Yeah, exactly. So it's okay, but it's just an incredible market of I mean, everyone who's been long link, insta rich, right? Like, there's all sorts of things you can do in this space.
I should have believed that. I should have believed that meme magic when I first saw it. Oh, man,
it's hard, and people are like people are people oversimplify the courage that it takes to believe in some of these things. If you held Bitcoin back when it was in the $300 range in kind of 2015, 2016, everyone was leaving. Everyone was like, this is kind of stupid, 2014, et cetera. And then it happened, and then it worked, So I think the same thing is true for a lot of these cryptos. They go through long periods of just nothing's happening. What's going on? And then these believers, they can get massively rewarded by the outcomes, and it doesn't always happen. Sometimes they just lose all their money, or they just lose a lot of money, or whatever they invested, or whatever. But it's an incredible market because of the potential. So yeah.
Indeed. Do we have any more questions for Mr. LAMBO in chat? Got any questions for me?
No, I mean, I'd love to. I'd love to learn more about your your thoughts on BCH today. I know kind of some of your thoughts on BCH, from some of your podcasts, but I'd love to, I'm trying to be a neutral arbiter on this fork and BCH, but what are you thinking about all this?
I'm thinking ABC needs to go, to put it bluntly, to be quite honest with you, if that hasn't shown through at all. I think their leadership is just poor. I mean, I've seen so many developers just kind of get pushed away and like are extremely frustrated with the antics of ABC, and that's it, like they put themselves in a position where they can decide with this 6 month hard fork thing, like, oh, we're gonna do it 6 months, and it just, I don't know, it's cause of it seems like, from watching, I know I'm not a dev, but it seems like a very toxic like developer environment. I know there was like that working group for the difficulty adjustment in Telegram. There was a group in there, and there was a great discussion happening, like awesome discussion happening. And then like Omri out of nowhere comes, says, "Hey, I'm doing a different difficulty adjustment algorithm." It's just like where did this come from? It's just like, that's just one example, right? And so it's like all this, and these are like smart developers. It's not the community deciding. It's like the smartest people in the field, some of the smartest people in the field trying to figure it out, and it's just completely ignored. And so I don't know. It's maybe they haven't gotten funding because people don't want to fund them. It's like I don't know. I think they just got to go for the healthiness of the coin. Really, it doesn't seem like it does seem like a dictatorship. I mean, now it's been put into the laps, like you're going to eat this IFP or be a different chain, pretty much. And so when that happens, like, yeah, you have to ignore this, otherwise it is a dictatorship, right? And so that's not what Bitcoin's about. I know there's keys to the repo, and somebody's got to hold the keys to the repo. Somebody holds the keys to every coin's repo, right? Like Vladimir owns the core repo. It doesn't mean he has absolute control over it, but I mean, he kind of does, right? I mean, he changes the password.
Well, yeah, I mean, if Vladimir decided to make 22 million Bitcoins, he wouldn't own the keys to the repo anymore, and we would just say that's the repo that we don't really view as Bitcoin, and this is the new repo, So, I think you're completely right. And I mean, do you think there's a scenario where, so I mean, there's obviously, and all the ABC supporters will tell you that there's a scenario where everyone is running an IFP blockchain, and Amori will say that that's the case. Do you think there's a scenario where basically ABC doesn't have IFP and we're all running a no IFP blockchain? Do you think that's likely as well, or possible, or do you think it's dead set and there's definitely going to be a fork and there's definitely going to be a blockchain that has IFP?
I think there's definitely going to be a blockchain that has IFP.
Okay.
I mean, I know, like, it's just like I know minor signaling isn't like all that, but like they put it up for minor signaling and nobody voted for it. Like nobody voted for it. And I know it's minor signaling, and then they bring it back. They bring it back completely when clearly tons of people didn't want it. And so Omri said this many times, said to me in person once, it's the game of chicken, right? Two people are driving a car at each other.
Yeah.
And the strategy to win is to throw your steering wheel out the window and make sure the other guy sees it, right? That's how you win, because it's like, you have strong commitment, right? And so he threw the steering wheel out the window. So
that's those are strong words.
Yeah,
that's interesting.
He said that many times. And so you have to, what do? You gotta fucking have a car crash then, otherwise you lose. Like that's the end of story for that. So I don't know. I think the IFP itself, it's been debated many times, but I think it literally changes the incentives of Bitcoin. Like at its core, literally it changes where the Coinbase goes to. It's a change of incentives.
Yeah.
And so just off that basis,
I think like it's. Yeah, if it wasn't a significant change, we wouldn't create a futures contract for it. I think similarly for ETH with POS, or if another coin said, hey, we're going to double the supply of our coin, these are things that doubling is probably something that would just get rejected. But I think the interesting opportunities for futures is where there's kind of some disagreement. Like the Bch Abc future, it's not zero on CoinFLEX. That tells you something. So, I mean, yeah, I think it's a really big question in terms of that game of chicken. Like, what's going to happen during the next few months, and that'll cause a pricing impact, and that'll kind of cause volatility in the contract. But it also, like, we don't know. The nice thing about the outcome is, like, we don't know. Maybe IFP leaves the ABC code base. Maybe it doesn't. But how do you actually pull that steering wheel completely out? So yeah, I mean, I think it's definitely interesting times. It's definitely one of those things where
it's very interesting. It would be I think it would be the only time like a lead developer team kind of gets like unseated in crypto.
I don't think this is. I think that's a very good point. I think if that's what happens, if that's the outcome, I don't think that outcome has ever happened before.
Right.
So yeah.
Yeah, and we should really cool. We should get full details on like the IFP, like where's it actually going in 2 days when they lock their features in. So it's supposed to come out in the next release of ABC, but so we'll see like what the actual thing is. I mean, it's still going to be. It's either going to be towards ABC. I don't think it'll be like directly in Amory's pocket. I think he's going to try and do a foundation or something like that and try and make it a little more decentralized. But we'll see who gets seated on that board and kind of gets their perks, and kind of lobby to be on the foundation with them will be interesting. So
no, and I mean, there's been problems with foundations in terms of centralization before as well, and so I mean, it's one of those things that the nice thing is that we have no formal mechanism to resolve these debates, but we do have enough informal mechanisms that it's not just a bunch of people shouting at each other on Twitter or Telegram. So it can actually be resolved. It can actually be something that has meaningful change or not meaningful change in a direction the market doesn't want. And so that I think is really definitive proof that like a coin's community is not asleep at the wheel, and that the coin is actually in the driver's seat. The community is actually in the driver's seat rather than the developers. Mm-hmm. So yeah.
One thing about Future, we have a BSV guy. This is gonna be a weird thing for me to say, but he's my favorite BSV guy. Okay, it's TOG.
Oh, cool.
He's TOG in the chat. Yeah, you're welcome, TOG. Was there ever any futures for BSV? That was like kind of a messy one, right? Because they thought they were going to be on BCH, and then they were just like did their own chain when they realized they weren't majority hash. But they were their own chain right away. But was there any futures for that?
There was, yeah. There was Poloniex fork had a forked futures for that.
Because there was like there was a BCH ABC and then a BCH SV or something, or it wasn't SV at the time, I think, but yeah.
I think it was.
Was it
BCH? It was BCH SV.
Okay.
And BCH ABC, I think. So, yeah, and then it became BSV and BCH. There was a fork. It was kind of structured as a chain split market. So again, no leverage. But a very interesting market nonetheless, and kind of it traded actively on Poloniex and then OKX as well. And yeah, I think that market was useful. There was clearly two very, very divergent communities there, and whether there was enough merit to create a fork, who knows? But now you've got two different communities. And there's two different outcomes. There's two different futures and two different paths, and it might be that with kind of sustainable developer funding, who knows? Maybe ABC will take over the world, but we can put that to the test. And so it's kind of like cheating, because you get to replicate. It would always be nice to replicate the universe and live in two different worlds. And kind of with these futures contracts, we kind of get to peek into these potential universes. But with blockchains, it's not like the government of a state. There, in a physical reality, you can only have one reality. You can only have one outcome. But in a kind of digital reality, you can have multiple outcomes that kind of coexist together, and that's that's really cool. That's really amazing.
Yeah. Yeah, definitely. It's interesting times. That is guaranteed. So yeah, you plan on doing anything November 15th? You gonna go on vacation or be on the beach?
I'll be I'll be uh I'll be right here settling future, dealing with futures contracts.
You'll be watching Colin look at his live stream.
Exactly. I'll be watching Colin's live stream.
Yeah,
Maybe back.
Yeah, maybe. Yeah, it was. I remember there's been. So I've done it just about. The only one I wasn't on. I was working that day. I was shooting some video stuff. Was the BSV split, most fun one, right? And like CoinSpice did their own live stream. That's before I was involved with them. And they got like so many fucking people on. It was like it's so long. I was like literally worked like 12 hours that day, and I was just at lunch for like 30 minutes, just like watching like this, like oh
Yeah.
but I missed that one. But I'm not gonna miss his next one. I'll tell you that. So
it's gonna be good. It's gonna be interesting. Yeah. I mean, hopefully it's rather calm.
Right.
That's what we're trying to help out with is any even rumor of a fork creates uncertainty for people. And futures and prices and markets have the ability to calm uncertainty and give the market an indication on what's going to happen or how something's going to look. So hopefully, if we can play a small part in this, we can kind of provide some clarity to the market on what's going to happen and kind of the outcome. So that's the goal. We'll see. I think leverage is a useful tool as well. And yeah,
for sure. Yeah. Going back to the other fork days, the ones I were hosting, the boring ones, it was funny because it was like we were just like waiting for the fork, and then like, oh, there's a Schnorr transaction. Like, so excited.
Oh, it happened.
Oh, it happened. Or like, well, there was one other one that was just like so lame. It was like the reverse bites or something like that, where like people were just like putting palindromes. People were just like putting palindromes in the transaction. I was like, I don't know what I'm looking at, but yeah, that was. And there's always been something that like goes slightly wrong, almost every time.
Well, the BCH one was, I think, the most interesting fork because the creation of the difficulty adjustment algorithm meant that it took 6 hours to get a block, and then you'd have these major kind of time differences in between blocks because it was a new algorithm and on the difficulty adjustment, and so difficulty was kind of grinding lower and lower and lower, and so it was really interesting because that was actually a lot of effort to create, and the other forks post that have been relatively less effort to create. But there's, when you have SHA-256 proof of work, it's not guaranteed that creating a fork will even succeed.
Right.
You can get 51% attacked to obscurity. You can have all sorts of things happen to you. ETH Classic is a decent example of a proof of work fork of Ethereum that has had major problems that BCH has not had with reorgs. And so, it's, if you try to send ETH Classic to Coinbase, it's going to take 2 weeks.
Oh yeah, I saw that. Yeah.
It's just going to take 2 weeks, and so I think there are engineering, social, financial, and economic challenges with blockchains and opportunities with blockchains as well. And kind of resolving them and kind of the way that they're resolved is kind of what creates, an opportunity and stuff. So it's amazing. I mean, people think, oh, the coin is working well, or the coin is functioning, or transactions are being processed, and they just think it's magic. But it's actually a lot of really hard work from a lot of different humans coordinating across the world in a decentralized way that makes it all work.
Yeah. When you brought up ETC, it just reminded me of something I saw. They're actually trying to do like an IFP as well. Have you seen this?
No, I didn't.
Yeah,
this is great. We should do governance futures on ETH Classic.
Yeah, there you go. There's another contract for you. Yeah, it was. I don't know exactly. I don't know the details, but it was something about Charles Hawkinson wanted to come in and like put a IFP into ETC because the devs were complaining they weren't getting paid, and same old story, right? Of a minority fork happen. Just minority fork thing. So
Yeah, just minority fork things,
Yeah,
you know,
it's the classic.
things that any human would normally understand.
Yeah, definitely. It's a natural
Yeah,
part of life.
it's like yield farming. It's a niche thing, you know, but
Yeah,
but
niche of
but people who
niche.
care about it
Yeah.
a lot.
Yeah, crypto's a
So
niche,
yeah,
and then you have like the Bitcoin Cash niche, and then you have like the internal IFP niche argument. It's like niche of niche of niche of niche. It's like
yeah,
it's so
and
yeah.
the cool thing is, I mean, you can be a BCH investor and not care about this.
Right.
So you can be a passive BCH hodler, and you actually benefit from these fork futures existing. You actually benefit from this debate happening. If you think that the debate and the futures and the these discussions will lead to a better coin, you actually just benefit passively. So I think that's one of the nice things about blockchain is there are people that are experts in Ethereum and DeFi, and they benefit from that. But they benefit from that knowledge they have. There's also just passive investors in BCH and all these coins that they just benefit from the innovation that's going on. They don't have to pay attention to it.
Mm-hmm.
So it doesn't demand high levels of involvement. Using some of the protocols, using some of the futures, using some of the coins, using the tokens demands high involvement, but just passively holding the cryptos doesn't. And so that's one thing that is really helpful in all of this.
Yeah, definitely. All right, I think we'll wrap it up there.
Cool.
Any last thoughts?
No, let's see what happens, and hopefully
put your money where your mouth is.
Decision. Yeah, put your money where your mouth is. That's my last thought.
Put your money where your mouth is. All right. Thank you so much, Mark. I will be hanging on Twitch for all those people. Links in the description for a little bit after. But thank you, Mark, again for your time. It's been wonderful.
Thanks so much.
And you have a good night, sir.
Have a good day. Have a good evening. See ya.
Yeah. Oh, it's because it's day. All right. Have a good one. That's awkward. All right. Starting soon. All right. Now I gotta set up my right thing. Okay. You can't even see my face. Okay. All right. We'll go back to the desk. Oh, I gotta end it on YouTube. This is really awkward. All right. Go to Twitch. All right. We're on Twitch now.